The price of gold continues to break records, and there's not much sign of it slowing down. But we are seeing a reoccurring theme in the bull market for gold, and that is China. China has become the centerpiece for what has led to the rally for gold this year, and I think it's starting to laser focus on what's going on in Shanghai and Hong Kong. We'll discuss why those places are so important as we explore. I've said for a number of months now that we should be watching what is going on in China, not only in terms of gold, but also silver. But we're going to focus squarely on China right now because it's really making the news in more ways than one, especially after what has been occurring with regards to tariffs. Another threat of tariffs, and is having a dramatic impact. Now we see that gold has notched fresh records above $4,100 an ounce. We saw that happen yesterday. By the time you see this video, who knows where it will be. In fact, it's getting closer to $4,160 right now. Probably going to keep climbing at this point with everything that's going on. But yeah, and a lot of it has to do with expectations of another rate cut this month, and investor flight to safety after a flare-up in trade tensions between Washington and Beijing, and that's what I want to get to. Before we get there, though, I want to remind you, channel sponsor Summit Metals, they've got these cool wallets, and you can fill them up with gram bars, still very affordable, even in this market, as a way to be able to hedge yourself with gold. Yes, indeed. So check them out in the description below for Summit Metals and experience their great customer service. Now, the metal has surged around 57% this year, likely even more now, breaking that $4,100 barrier for the first time on Monday. Its rally has been driven by multiple different factors, including geopolitical uncertainties around the world, but especially in China right now, expectations of U.S. interest rate cuts, and continued buying by central banks around the world, and also the inflows of ETFs. That's another thing we're seeing here. We're seeing pauses in trading in a number of different markets with gold and silver around the world, including the Perth Mint and StoneX here in the North America. I've talked about that with regards to precious metal trades and other areas. But the uptick in U.S.-China trade tensions, the ongoing government shutdown, and expectations of further Fed easing are all supporting gold, according to Peter Grant. U.S. President Donald Trump's threat to impose 100% tariffs on Chinese goods, a rollout of tit-for-tat port fees by the two biggest economies, and a broader macro trend of de-dollarization could push gold to $5,000 an ounce by the middle of next year. Trump is set to meet Chinese leader Xi Jinping in South Korea later this month. So the tensions leading up to that meeting are part of what is keeping gold up, meaning that essentially China is ground zero for gold for the rally right now. Non-yielding gold tends to do well in low interest rate environments, and markets expect a 25 basis point rate cut at the Fed meeting later this month, followed by a similar reduction in December. Based off the data that we have, it's fair to say that the outlook for employment and inflation does not appear to have changed much since our September meeting 4 weeks ago, according to Jerome Powell, even though other data are not being released by the government because of the shutdown. But what's happening in China is even more important, I think, than a government shutdown. Gold fever has gripped Hong Kong as residents cash in on the record rally. And that's a little unusual headline coming from the Malaysia Sun, from the Asian markets here. Hong Kong, long queues snaked outside Hong Kong's gold shops this week as residents rushed in to cash in on a historic price surge that sent gold soaring above $4,000 an ounce for the first time ever. From family heirlooms to bullion bars, people brought in whatever they had, their rainy day treasure, to turn into cash. As the Chung Ki gold shop near the city's central business district, about 50 people lined up, clutching gold bars, necklaces, and bracelets, eager to sell into a rally that has pushed prices up 50% this year. And that's people selling. Now, I'm going to tell you what I bought later in the video that's going to fill this space right here, for stay tuned for that. And I'll tell you the story behind the recent purchases that I've made of gold. And it's an unusual circumstance, but it's something that I benefited from activating, at least to some extent, a little bit of FOMO. I don't encourage you to do it, but stay tuned when I talk about that. Among them who were selling at these shops in Hong Kong was Therese Lam, a lawyer who had been saving gold for nearly 2 decades. It's a very good time to sell. I've kept this gold for nearly 20 years now, she said, holding a tote bag containing a mix of bullion and bracelets, including several 5TL 6-ounce bars worth about $28,500 each. Lam said she planned to sell only part of her holdings, believing prices would rise even higher. Gold is a very safe investment for me in these uncertain times. It's solid and you can hold it forever. It maintains its value. Of course, that question makes me wonder, well, why would you sell it then? If it's going to maintain its value, you're trading it for a fiat currency. You might as well hold on to some of it or a lot of it. But anyways, gold prices, surging past $4,000 an ounce back on October 8th, continuing a record-breaking rally fueled by geopolitical tensions and global economic uncertainty. The metal, long considered a safe haven asset, is one of the best-performing investments of 2025. So while Hong Kong residents rushed to sell, gold traders in Shanghai reported the opposite trend. Store managers said more consumers were buying than selling there in Shanghai, confident that prices would climb further. Most transactions were trade-ins as customers exchanged older jewelry for newer designs. That's right. Back in Hong Kong, Zhong Qi, known for offering some of the city's best buyback rates, had to stop issuing tickets by October 9th afternoon after its 300-person quota was filled. That goes to show you just how busy they were. And they're seeing more and more signs of places shutting down. And, of course, how important gold is in Asian countries in general, China in particular. This does not surprise me one bit to see this. Inside the cramped shop, a worker tested gold purity with a blowtorch while proprietor Chung weighed jewelry on a scale and handed out wads of cash. For larger transactions above $12,850, customers were issued checks and asked for identification. It's extremely busy, Chung said. Demand has been very, very high. People just want to sell, which is an unusual thing, but that's what's happening in Hong Kong as opposed to Shanghai right now, both in China. A handwritten sign at the entrance said, "No more customers will be served today. Come back early tomorrow morning to get a ticket, then wait outside for your number to be called." Man, for some time, the rush to sell was more than profit. Terrence Hung, a 34-year-old construction worker, sold 400 grams of family gold, including ornaments gifted to his son as a baby to fund his family's planned move to Scotland. "We're going to immigrate soon, so this is a great time to sell to get some extra money for our new life," Hung said, standing beside his wife and young son. So he received a lot of money, a lot more than what other retailers were offering from that location. So people have different reasons to sell, but it looks like there's a lot more of that happening in Hong Kong than in Shanghai. And most of you saw the video that I posted about Japan and all of the buying that's going on there, and likely other places as well. And I think even Vietnam, there's some news coming out of Vietnam as to the heavy queues that are happening along there. Now, let me tell you about the gold that I bought. This is the latest piece of gold that I just acquired here. And it is an Perth Mint piece here from 2025. And a very nice here. It shows the classic design for the pillar dollar commemorated on this piece. A better bullion product from the Perth Mint. Bought this thing for normal bullion price when I made the purchase. By the time the check had cleared and it had made its way into the shipping queue, and the price had gone up so much that I basically got it for under spot, just under spot. And now that it's shipped to me today, it is essentially about $160 below spot. So by the time I got it, it was about $100 and some over spot. Now it is $160 below spot. Crazy. But that's the kind of market we live in. And of course, whenever you buy gold like this, you have to always prepare for the potential worst. In other words, prepare that it could lose $100 or so, and you're paying a much larger premium. But I do that every time I make a purchase. The next piece of gold I've had on layaway for a little while at my local coin shop. And they did charge a little extra premium on this, even though it is Mexican gold. I think they may have miscalculated it, but basically, by the time I got it out, I got it for basically spot price, maybe a little bit more. But I had it on a layaway for about a week or two, and so there it is, little 5 pesos. Those little Mexican gold pieces are nice, and I wanted to add one of these, a little bit of fractional gold to the stack, as the price is getting so expensive. It's much more difficult to buy 1 ounce pieces these days. So there you have it. Let me know what your thoughts are about the latest purchases and about how China is ground zero for the gold rally this time around, or at least at this point in time. I'd like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.